I'm going to start in the truckload space. So two of the key measurements for those of you who have joined in the past that we'd like to keep an eye on is that outbound tender volume index. So for those of you not familiar, for those of you who need a refresher, this index is at 10,000. So anything above 10,000 indicates an expansion, and anything below 10,000 indicates a contraction. So if we go back to mid to late March, this index hit close to 13,000. And again, give you some context, in 2019, this index never hit 11,000. So significantly up. This is all sort of the panic buying that was eating up all the capacity. As of today, the volume, outbound tender volume index is now at 8,500, or slightly above 8,500. So not only a significant drop, but obviously indicating what's happening out in the marketplace, where there is an awful lot of capacity. Sure, anybody that's hauling into grocery stores, into the grocery DCs are still flying high, but a lot of these truckers out there are scrambling to try to find work. So I'm sure everybody's phone is ringing off the hook, as mine has been. The other key index that we like to look at is the outbound tender rejection index. This is an index that shows the amount of times where there's a contracted rate that's in place and it gets rejected by a carrier. So obviously this would indicate the higher the rejection rate, the tighter the capacity is. So following suit with the volume index, go back to that same time frame, rejection rates were over 19%. So highest that they've ever been. As of today, they are 3.32%. So obviously significantly low. And just to sort of normalize things, you know, anywhere in the mid single digits indicates sort of a balanced marketplace. Anything below that indicates, again, a ton of open capacity. So we're seeing an awful lot of capacity in the market right now.
Hey, Chris, real quick. We want to just a quick question we had was, what's the baseline for this index, especially when you say above 10,000? Above 10,000 what?
So it's just an index. So use 10,000 as your baseline. So anything above that is just showing that the market is expanding. So there's more volume that's happening out there. It's not tied to a specific, like the 12,400 back on 327 doesn't equate to any sort of weight or anything like that. It's just showing the amount of volume that's in the marketplace. So think of 10,000 as your baseline. It's just like the manufacturing index that they use, that the U.S. government reports out. It's indexed at 50. So anything above 50 shows an economy that's expanding, and anything below 50 shows an economy that's contracting as it relates to manufacturing. Looking at some costs, so the national average for spot rates for dry vans in April is $1.72 per mile. That's down from $1.87 in March. Same thing for reefers in April, $1.99. That's down from $2.19 in March. And then for flatbeds, if that's in your industry, April was $1.98, and that's down from $2.19 in March. So again, significant drops. There's only really two markets right now that are showing any sort of volume increases, and that's Houston and Laredo. So if you have shipments moving outbound from there, carriers will be very eager to go in because they know they'll be able to get a load out. Everything else is incredibly soft. In fact, out of the top 100 volume lanes for truckload shipments, only two showed price increases, and that was actually Denver to Phoenix and Denver to Dallas. However, the return trips, meaning Phoenix to Denver and Dallas to Denver, all fell. 3 lanes out of 100 held steady, and 95 lanes showed a drop in price week on week. So it's following suit, you know, and everybody's like, great, this is all kind of backwards looking. What do you guys expect moving forward? It's tough to tell, but I would be happy to get some skin in the game and say that we haven't bottomed out yet. And I think that rates are going to continue to drop. And I think until things start to normalize a bit, we're already seeing some states that have made the decision to reopen, and we'll all know collectively in a couple of weeks whether that was a really good decision or a really, really bad decision. But as more and more of that happens and businesses open up, then we'll see volume start to tick back up. We'll see capacity start to tighten a little bit, and then we'll also be keeping our eye on truckers that end up closing their doors and just shutting down because they just don't have the cash flow to weather the storm here. Some other miscellaneous and really company level updates. So obviously, And this hits very close to home here with people being furloughed, employees doing layoffs. It's really everywhere. So last week, the government, the Fed, announced another 5.2 million of unemployment filings. That brings the 4-week total to over 21 million. That's obviously bigger than it's ever been. FedEx Freight announced a small number of furloughs for employees. IRCW has also furloughed a small number of employees. ArcBest also introduced some cost-saving measures. So 15% reduction in hours worked available for hourly employees. There's been a salary reduction, a hiring freeze, pay increase freeze, and a suspension of the 401k match. Now, the thing about ArcBest is, one, they're a quality carrier. They're going to weather the storm. And really, if you look at their customer base, it's pretty broad, meaning that they don't have any one customer that accounts for more than 4% of their top line revenue. The complete opposite of that would be, think of XPO Logistics with Amazon and the fallout in 2019, where, if you listen to all the reports that were out there, Amazon contributed about like 900 million in revenue, 600 of which on the trucking side that went away, and the warehousing side as well. So ArcBest is really positioned really well. Arrive Logistics, so a fast-growing broker that we work very well with. They did a cut of 10% of their workforce. TQL, if you follow them at all, they slashed 500 to 700 positions. They won't confirm how many that the actual number was. But again, it's just sort of reiterating what we're all seeing on a day-to-day basis, and it's hitting home in our space, in the transportation space. Moving on to air freight. So air freight is obviously a hot topic for a lot of us. And I've been having a lot of conversations, doing a lot of research, doing a lot of just deep diving just to see what else we're not seeing that's out in just your normal publications. So the FAA has given its guidance on cargo moving in passenger cabins as it relates to sort of the weight, the balance, and the fire suppression. So the thing about passenger aircraft is there is not any fire suppression systems built into the passenger cabins. That's on cargo planes. So what they're just saying is that they want people to ride with the cargo in the passenger space just in case something were to happen there. American Airlines cargo, they're adopting a penalty fee, and we've reported on this with a different carrier before, for shipments over 100 kilos that either cancel late, or the shipment size is reduced, or they just fail to show. The Air Forwarders Association is requesting $1 billion in cash grants and $1 billion in interest-free loans from the next stimulus package to be allocated to them. So, there was $61 billion that was awarded to the airlines, but the forwarders didn't get anything out of that. So the government looked at them as a customer versus, somebody who's actually handling the cargo. And the airlines, again, so they've reprojected the estimated losses. It's up to $315 billion for this year, holding all things equal. That may go up depending on how long things sit out there. From a forwarding perspective, you've got about 3,500, give or take, air forwarders in the U.S. In the most recent survey that I looked at, 65% are already have said layoffs are either imminent or they're already underway. So, they're following suit as well. A lot of what was interesting is a lot of the actual cargo carriers, so think of the underlying assets, they're demanding payment before the shipment is even onboarded. So think about what a massive cash flow problem that's going to be. So if they're working with a freight forwarder and they're saying, sure, you got 10,000 kilos you need to move, well, you got to pay us first, which means that the forwarder is going to come back and tell the customer, we can move it, we'll buy the space, but you're going to have to pay for it first. And it's a cash flow problem all the way from beginning to end. It's really just difficult times. I actually had the good fortune of getting the executive director of the Freight Forwarders Association on the phone. I just wanted to pick his brain and just see, like, hey, what are you seeing? What's your outlook? And that Freight Forwarders Association has about 350 to 400 members. The executive director is a great guy, and he's got just a lifetime of experience. And even he is sitting there. Everything's highly contingent on the unknowns and the quote what ifs. So nobody really knows. Rates from China to the U.S. are expected to hit $30 a kilo. And I was just talking to a good friend who works for a forwarder, and I I was on the phone making a comment just saying, Jim, when Apple releases product in a stable environment, you see those spot rates get up to $10 a kilo. That's an anomaly, but it's pretty explainable. I never in my life thought I'd see $20 a kilo. And he kind of cut me off and he laughed and he said, 20. He goes, I literally just confirmed a shipment, $25 a kilo coming from Shanghai going to Chicago. So it's truly just incredible. Chartering aircrafts, which is, a big buzzword around, those costs are through the roof, well north of $1 million per charter. I spoke with a very close industry colleague at another forwarder, and she had arranged 2 charters, just under $3 million for a customer, just to have them back out last minute. They didn't hit them with any penalty fees, and she was able to resell to somebody else. But it's just a very fluid situation. And for those of you who aren't as close to the charter business and cargo aircraft and passenger aircraft, just to give you a little scale, a full freighter it can hold about 550 to 600 CBMs, cubic meters. An actual passenger airline will hold about 140. So that's going to include the traditional passenger space with the seats removed. So that gives you like another 20 to 25. So you get about 125 in the cargo belly, and then another 20, to 25 up top where the passengers were going to be. One other thing that we're seeing that's causing delays coming out of China is China has instituted the CIQ, so it's a China Inspection Qualification Document, and that's delaying and causing issues coming out of China. So if you are sourcing out of China, please make sure and talk to your suppliers to make sure that they have, that they are aware of this and they have access to this document and they are aware of all the requirements that go with it. FEMA put a temporary restriction in that will carry through August, which is going to prohibit the export of that PPE, that personal protection equipment. Switching over to ocean freight a little bit, because there's an awful lot happening there as well, or not happening, depending on how you look at it. So right now, we're in the traditional ocean freight contract season. So if you are negotiating ocean freight contracts right now, we want to give you a little bit of guidance. It's probably worth checking their Z-score. So if you're not familiar with Z-score, please reach out to me. I can give you some background on this and where to access it. But the Z-score is essentially a statistical analysis to predict a company's probability of failure. And failure is just a nice way of saying, are they going to go bankrupt? And it's not definitive. Again, it's just a score. And it's based on forward-looking for the next 2 years based on their financial data. I believe this was introduced by Drury a few years ago. So if you're not familiar with Drury, really, really good organization. But a lot of the publications that they have, that's going to be at a cost, and it's not an insignificant cost at all. So if you are talking to your carriers, see if you can get their Z-score, understand their financial position, ask them point blank about their, not to be redundant, their blank sailing schedule, because it's everywhere, and understand the bunker schedule. Because what we want to try to avoid for all the shippers out there is another Hanjin situation, where Hanjin goes bankrupt and they have vessels that are loaded on the water moving. Now Hanjin, as a corporate entity, is not going to pay terminals to unload containers. So you literally have your product that you've already paid your supplier for, that's sitting on a vessel floating somewhere that you have absolutely no access to. So you just want to do your due diligence, especially now, given where everything is. Blank sailings, so massive amounts of blank sailings. Blank sailings are just canceled sailings. And this is the carrier's way of shrinking down capacity because demand is not there, right? Obviously, there's not as much production, not as much product. So they're just pulling vessels out completely. So through the beginning of this week, there were 435 blank sailings that were identified, with more being announced every day. And that equates to about 7 million TEUs of capacity being removed from the marketplace. Now, this includes Asia to US and also Asia to Europe. So it's not just US facing here. And what blank sailings do, obviously, is they create delays. And they contribute to the capacity crunch that we're seeing on the air freight side. So you've got less vessel options, and now you've got transshipments that might be missed because of these blank sailings. So your product that you may actually need could be sitting somewhere. then a lot of people will try to convert that over to air freight. And we all know very well what's happening in the air freight space. All right, moving on. Fuel. So awful lot happening in the fuel space here. The price of diesel dropped again. It's at $2.48 a gallon. That's almost 70 cents lower than it was a year ago. And this is 15 straight weeks of declines. The price of crude. So for those of you who follow it, you know what happened on Monday. The Monday price, WTI crude closed at negative $37 per barrel. So this was a huge sell-off of the May futures contract. So literally, people are paying buyers to take this oil off their hands. It's unbelievable. It's the first time that that's ever happened since they've been tracking this, which I believe started in 1983. Now, even at $10 or $20 per barrel, what you're going to start to see is oil companies, drilling companies, they're going to be filing for bankruptcy. You look at somebody like Halliburton, massive corporation, they reported a $1 billion loss in Q1. To further that, oil production companies, they've got $86 billion in debt that's coming due and needs to be paid between 2020 and 2024. Pipeline companies have $123 billion in debt that's due to either be paid or refinanced in that same period of time. If you think about a pipeline company, that also the residual impact is the steel companies, right? Because they're the ones manufacturing the steel to produce the pipe that the pipeline companies can put in the ground. It's really incredible. Now, the WTI crude did rebound and it closed at like $13.30, I think yesterday, and the Brent closed a little bit higher, just under $20. But just based on what we're seeing, that $10 to $20 range is causing a lot of panic for a lot of companies everywhere. And on the ocean freight side, so we know about IMO 2020 and the very low sulfur fuel. And initially, when this got rolled out, so on January 1st, this was trading at $700 per metric ton. The 7-day average based on a handful of ports that I sampled, it's at about $225 per metric ton. So it's just completely gone away. This is all volume driven, of course. The price of the IF 380, so this is the higher sulfur content fuel, that was at about, on January 1st, it was about $365 per metric ton. That's at $180. So really, the big thing is the spread, the difference of the spread. So you had like a $350 spread between the low sulfur and the higher sulfur on January 1st. And now you're talking like a $45 spread between the two. So what that means is a carrier like MSC, that they bet really big on installing those scrubbers in the beginning. They made a huge capital investment, kind of hedging that, this is going to be super expensive fuel to buy. We're going to institute these scrubbers. These scrubbers are going to pay for themselves because we'll be paying an awful lot less for that high sulfur fuel. So what that means is that they're going to struggle to show, the ROI on that investment for a while to come because the spread is so low. Also in the oil industry, there's been an agreement to cut 10 million barrels per day of production, but that's not beginning until May. Overall oil consumption is off by 30%. So consumption was at about 100 million barrels per day, and that's off by 30%. So even if you're going to cut 10 million a day, I'm not a math major at all, but there's still 20 million in excess there. So what we can reasonably anticipate even further downward pressure on all fuel types, whether it's, gas, jet fuel, bunker, et cetera, et cetera. And what's interesting about that as it relates to ocean freight is, the pricing in the ocean freight world is actually held very steady. So there's been a few blips here and there, and we're seeing some higher levels of import volumes moving through Southern California. But all that is that's just the production from back at the end of February after they came out of CNY and factories started to open up. That's all the stuff that's arriving now. That's not truly what's happening today. It's almost like looking in a telescope up at the stars. The stars that you're looking at right now existed however many millions of years ago. It's the same thing. Everything arriving now is stuff that actually happened 4 to 6 weeks ago. On the oil side, the inventories just continue to climb everywhere. And we're literally running out of physical space to store the inventory here in the U.S. So there's probably going to be some intervention at some point, but we reasonably expect a lot of downward pressure on all types of fuel.